I wanted to talk more about what the IRS considers a high net worth individual or a high net worth business. The IRS looks basically at what they think your assets are. They don't look at your liabilities, they'll look at your assets and potentially your gross receipts. So they use the $1 million number. So from an outside perspective, maybe $1 million seems like a lot of money, but usually someone with $1 million house or $1 million in assets also has liabilities. If you have $1 million in revenue, that doesn't mean you're making $1 million. A lot of time businesses like contractors, they may only make 10, 20% of that. So just because the IRS considers you high net worth doesn't mean you are, but you need to be prepared because you're more likely to be audited. I was talking with a new client the other day. They were being audited and their current CPA was telling them, just accept the changes by the auditor, don't appeal, it's going to get worse. Well, that's not the case. What happens is when you go to appeals, they look at what the original auditor says and then you can dispute that. We go to appeals almost always because what happens is you file a petition with tax court and then it goes to a settlement officer. The settlement officer is looking to settle the case, and almost always they give you a better deal than the first person because they don't want the case going to tax court. So think about it, the first auditor is more of a pit bull. The appeals officer or the settlement officer is looking to settle it, and you're most likely going to get a better result. What to do if you're audited? So when you're audited, it's really important how you handle the audit and how you respond to the IRS. So the IRS most likely will give you a list of items that they want and a scope, and you have to then look at what you have, what is real, what is not real, what was filed correctly, what was filed incorrectly. And then based off that, you can then determine how you should respond. You should not just give the IRS whatever they ask for. That can potentially hurt you. We see this a lot of times. People represent themselves or they get bad advice. Also, if someone prepared your return and they're representing you in the audit, I normally advise against that. The reason being, if someone prepared your return and they made a mistake, they're less likely to admit to it and they may try to cover it up, and they may be more worried about themselves than you. So it's really important to get a second opinion if you're being audited, and don't give the IRS anything before you're sure that it's going to help you, not the other way around. Don't help the IRS audit you. What that means is when you get audited by the IRS, they're going to request information, they're going to request potentially interviews, potentially to come to your business. You want to make sure everything you do is done to help you, and you're giving them the information that shows you in the best light, and you're giving it to them in the correct format. We see all the time people being audited, they're just giving the IRS what they ask for. They're not looking out for their own best interest, or the person that prepared their return is handling the audit and they're looking out for themselves, not their client.